Welcome to today's market report. European shares fall as fears of new virus wave grip investors. UK debt bigger than economic output. Lagarde sounds alarm about EU failings. Dollar rises but worries abound. European shares fell on Monday as sign of a resurgence in coronavirus cases in Germany and elsewhere unnerved investors who were hoping for a swift economic recovery from the crisis. The pan-European stock 600 index slid 1% by 7 o'clock this morning, with travel and leisure, oil and gas and bank stocks leading losses. The World Health Organization reported a record increase in global coronavirus cases on Sunday, while Germany's COVID-19 reproduction rate jumped to 2.88, a rate showing infections are rising above the level needed to contain the disease over the longer term. Scandal hit Wirecard, which lost 72% in market value over the past week, fell another 43.9% as it said a quarter of its assets totaling €1.9 billion, about $2.13 billion, that auditor Ernst & Young had been unable to account for likely did not exist and withdrew its earnings forecast. Lufthansa dropped 6.7% amid a showdown between the airline's biggest shareholder and the German government over the terms of a €9 billion bailout. On the FX side, sterling had its worst week since mid-May last week after data showed government borrowing had hit record highs. Britain's public debt exceeded economic output for the first time since 1963, when the country was still paying off debt from World War II. Sterling was already trading below 125 against the dollar on Thursday after it had slumped more than 1% as the Bank of England increased its bond buying program by £100 billion to try and print its way out of trouble. The euro weakened on Friday as European Union leaders made no progress in a video conference discussing a €750 billion coronavirus recovery fund that has divided them bitterly for weeks. Adding more woes was European Central Bank head Christine Lagarde, who told European Union leaders that their economy was in a dramatic fall and called the bloc to act to spearhead revival. Lagarde addressed EU leaders meeting via video conference to wangle over how to engineer a recovery from the crisis. She said the Eurozone economy was headed for a sharp decline of some 13% in the second quarter and reiterated the bank's forecasts for the GDP drop of 8.7% in 2020. She also said the full effects of the EU's worst economic downturn have not yet manifested themselves fully on the labour market, and that the Eurozone's unemployment rate could hit 10%. Increased demand for safe haven assets drove the US dollar higher on Friday and produced its best weekly gain in a month. Despite these gains, the dollar has entered into a consolidation phase as uncertainties over a second wave of the coronavirus have held the risky rally in check. However, according to Yale University senior fellow Stephen Roach, a dollar crash is virtually inevitable. An exceptionally low domestic savings rate and a chronic current account shortfall are expected to get worse. The national savings rate, adjusted for depreciation, is probably going to fall more deeply into negative territory than at any time in the history of the US or any leading economy. This is today's market news. Thanks for listening. We'll see you next time.